You are watching Market Watch, the brief overview of the key events from the world of finance. Inflation is still the most important element, because the Federal Reserve continues to closely monitor its change. Last week, Jerome Powell once again announced that slowing the growth rate of the Consumer Price Index to 2% is the main priority of the regulator. Therefore, the projected growth of the indicator can put pressure on key U.S. stock indexes. Recall that the release will take place on Tuesday, and according to the consensus forecast of analysts surveyed by Bloomberg, inflation rose by 0.4% in February after rising by 0.3% in January. Despite the increase in the growth rate in a month-to-month ratio, the annual rate may remain at the same level of 3.1%. While this may sound like good news for investors, the lack of a reduction in inflation casts doubt on the Fed's willingness to lower its key interest rate. This scenario is bearish for the stock market and bullish for the US dollar. After all, if one does not have to rely on monetary policy easing, then the yield on government bonds will remain high for a long time. High interest income on Treasury bonds is a significant problem for gold and equity bulls. Discussing the prospect of a longer-term retention of the Fed's key interest rate at the current level, which does not imply a decrease in government bond yields, calls into question the expediency of buying the Japanese yen in pair with the US dollar. Last week, we saw a sell-off of the dollar/yen currency pair, as Jerome Powell's statements that this year the moment may come when a rate cut would be appropriate increased demand for the undervalued Japanese yen. Given all this, the release of the U.S. inflation report may have a strong impact on the pair. The cryptocurrency market is also waiting for the release of inflation data in the United States. After all, its unexpected growth can provoke sales of key stock indices, which in turn will put pressure on most cryptocurrencies. As strange as it may sound, but after the approval of applications for the creation of a Bitcoin ETF, the cryptocurrency market became more dependent on the mood in the U.S. stock market. Therefore, inflation data can both help to continue growth and put pressure on the largest cryptocurrency, which naturally affects the trading dynamics of other coins. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.